Good morning, everyone. Very glad to be here talking on this panel and sharing. With that, I will pass over to my esteemed panelist and to introduce.
I'll go first. Hi, good morning, everyone. Ian Blair, Global Head of Surveillance at Credit Suisse. I think it's fair to say, or safe to say, I just positioned my first trade surveillance alert back in 1998. It was a wash trade, I seem to recall. And I've been doing that ever since. So I have seen, of course, a number of changes over the last 25 years in terms of technology, senior management approach, and regulatory approaches to surveillance, and have enjoyed the journey a lot. And I'm very pleased to be here with this esteemed panel.
Thank you. I'm Peter Gibbinson. I work at UBS and run the market conduct surveillance execution team. Before that, most of my career I've been a trader, trading manager, mostly in the FX space. And previously, at my previous incarnation at Standard Chartered, I set up and ran a first-line controls team as well. Happy to be here.
Good morning, everyone. I'm Robert Mason. I work as the Director of Regulatory Intelligence at Global Relay. Global Relay is a compliance technology vendor specialising in archiving, communications monitoring and e-discovery. Brief intro, I worked as a compliance manager at Lloyds Banking Group and at UBS, where I was responsible for the oversight of market abuse monitoring, including trade and comms. Before that, I spent a 5-year tour with the FCA, initiating the team that supervises the market abuse regulation.
Thank you. Hello, everyone. So I'm Tarek Slassi. I work for BNP Paribas in charge of surveillance monitoring, which encompasses defining norms and standards and also monitoring and control for the group.
Thank you, everyone. The panel today will be talking about the current state of trade and communication monitoring. In general, we will go into 4 separate topics or themes. Yeah, and with that, I will go directly to our first theme. So, regulatory changes and expectations. How that impacts the FI approach to trade and communication surveillance. With that, over to you, Ian, to start with.
Yeah, sure. I mean, many of us are aware of the plethora of regulations in this space. There's MAMA, MiFID II, Dodd-Frank, GDPR, plenty of FINRA and SEC requirements and otherwise, which of course have all spawned large programs of work and focus by big firms and other firms on data, technology, and people. But I think importantly, one point I'd like to tease out here is in terms of the regulatory expectations. I think any large global bank could probably expect to disposition about 100 or so examinations and inquiries from regulators, auditors, and external auditors across the globe in a single year. So they're very focused on not only what you do, but actually how you do it, which is hugely important. There's always a very detailed focus by the examiners on your governance, on your coverage, i.e. your risk assessment, on your alert disposition, especially around alert commentary and alert aging. We've certainly seen instances where the examiners will take and use data analytics and look at 5,000 alerts or so and run analytics through them to see which alerts were closed with less than 5 words. And then they will dive into those and try and tease out where there might be some alerts that haven't been closed appropriately. And that's just the kind of level of detail you have to contend with across the globe. Equally important, of course, are things like training and quality assurance, which is another area of great focus. Tuning and calibration, which I think we'll probably get onto in due course. And importantly, change protocols and the controls around your data management framework, which again is a hugely important element of the overall operating model. I think also just to tease out what we've been witnessing over the last sort of year and a half in terms of regulatory fines in the electronic communication space. Clearly a lot of focus by the regulators on the retention of electronic communications, in particular in this new world we live in terms of social media. So the focus there is very much around how we as firms in the industry are able to properly archive and retain our electronic communications. And to that point, the regulators look very, very closely at our policy and what's in the policy and how effective it actually is the training that banks will provide to employees on the policy, any kind of attestation to the compliance with the policy, and of course, electronic communication surveillance, which is hugely important in that aspect and that context, and is subject to a lot of deep dives around trying to see how banks are able to determine or detect where folk might be taking business-related communications off the infrastructure and onto social media, which are unapproved channels. So there's a lot going on there. Equally, they're also very interested in technology and the provision of such technology such that firms can converse with clients in an approved and compliant way. So if clients want to use social media sites such as WhatsApp or WeChat or Telegram or Signal, that there are technologies out there that you can harvest those communications compliantly, store them in your infrastructure, and then subject them to retention and surveillance. And lastly, I think they also focus on disciplinary matters and how you and what you do when you uncover folk who have been using communications or that are unauthorized, and your overall approach to that. So quite a lot going on, Saka, is the short answer.
Indeed. Rob, do you want to comment on that?
Yeah, I'll pick up a couple of those and a couple of other approaches perhaps. I think from engaging with the clients that we have, supervision of regulation in this area is more intrusive and stringent than ever. The US regulators in particular seem to be pressing hard on the gas to strictly supervise compliance for market abuse, and I can't remember a time when regulators have been so intensely scrutinising surveillance capabilities. I think as ever, when you look at sort of the regulatory change and impact and what's happening with our firms, enforcement outcomes remain the key driver, and their wider impact and the greater reaction that they've seen that was required remediation. I know there's been a cost of living crisis, but they're handing out some fines at a fairly sort of next level now, $200 million parking fines for our record keeping issues. I'm not going to go into detail there, but I think, you know, a wide impact that continues to hamper a lot of our clients and participants with record keeping and surveillance, and that effective WhatsApp capture is causing consternation. And we're also seeing a little theme around iMessage, so not just WhatsApp and WeChat that's causing issues. Just picking up further on that enforcement theme, is 2023 the year of voice monitoring? It does feel increasingly like this was previously a best efforts basis, but now with a couple of fines, one notably in December last year, for BGC, the needle's moved, I think, around voice coverage. There's also increasing regulatory focus, I think, on more emerging areas, commodities, energy. We saw some cases in the nickel LME markets and Glencore, and pretty much any crypto story you want to mention. So there's a lot to keep us busy in the emerging themes department. I think, dull though it is, there is a continued focus around the RCSA, so your risk control self-assessment process to identify and drive that management of risks, and we saw that even repeated again in the most recent FCA Market Watch. I think just on the subject, there's a question around whether the risk assessment process ever tells you anything new. And I think that's particularly contentious again and not straightforward in practice against resource challenges. But certainly I think there might be some potential to have more effective, proactive rather than reactive resources deployed to that. Just lastly, technology, of course, working for a technology vendor is seen as a silver bullet, and of course it is. But in some cases, you know, human capital, Ian mentioned the sort of data engine people part, and I totally agree with that. All of those components remain absolutely critical for optimum outcomes. And obviously technology is important and critical, but retaining quality talent and attracting talent to and retaining them to a fairly unsexy industry is not straightforward.
Thanks, Rob. Peter, any comments?
Yeah, I mean, a couple of things. I think there's an increased focus, especially from the SCA, in terms of prevention of financial crime, which MAR falls under. So I think there's much more focus in terms of how to be proactive rather than reactive. So I think there's a lot more focus on things like repeat offender programs and how you look to prevent market abuse before it happens. I think one of the other pieces that has come up historically and is still a challenge is in terms of how you link your AML monitoring versus your MAR trade surveillance. How do you cross-pollinate between those teams? I think that's a challenge, and I still think it's something whereby things aren't linked up as well as they can be. And I think the final piece is there's some more changes in terms of MAR. So the UK is going to adopt its own version of MAR outside of Europe, and there's going to be changes especially to the FX regime from a civil and criminal perspective in terms of bringing FX spot into scope. So that's going to be some quite significant changes for the industry as well.
Thanks, Peter.
Yeah, I think that since MAT2MAR came into force, the regulatory expectations have been increasing year after year. And the financial institutions are really submitted to a result obligation. It's not about the means that you put on the table, but you really need to have results. So whatever the means you put on the table, whatever the robustness, the visible robustness of your framework, if you are missing some market abuse, not detecting them, you're potentially receiving a sanction. So, and moreover, I would say that the market abuse fraudsters are using more and more sophisticated techniques to remain under the radars. So it's like you are hunting for a moving target. Hunting for a moving target means that you need to have some really relevant technology and processes to be agile enough to adapt permanently to changing market conditions and changing market abuse patterns. So clearly the surveillance frameworks are aiming to address multidimensional challenges. And one key component is clearly technology. So you really need to make the right change, the right options in terms of choosing the right solutions, the right technology, and implementing it in the right manner.
Thanks, Tarek. I would like to follow up actually in the first questions, and one of the things that Ian mentioned is focusing on how we do it. So I think that introduces a lot on the operating models, like enhancements, reviews of the operating models. It's actually like one of the things that I've noticed as well is like there's a lot of focus on track on when we introduce change, how we like do the, you mentioned tuning and calibrations, you mentioned like changing into the systems and the risk assessment. That's definitely an areas to grow on, and definitely on the technology vendors, like how you will adapt or like fit in your technology with the ongoing operating models. They don't assume banks will change the entire operating model just to take a new technology. And then the other one to Rob, we just mentioned like tech is a silver bullet. Yeah, like many of the, like again, the utilization of the technology, that's one of the comments I see. Like you see a lot of great product, but are we actually using it to its fullness? The training and the human aspects and how much we can bring our teams to like kind of upskill them to use this technology. And Tarek, with the one you mentioned really interesting about results, like it's actually the assessment framework, like how we can assess is what we have is efficient, is it effective, do we get productive results? Like those are all like key things. And talking about that assessment framework and productivity, it's a very good way to move to the second topic where we talk about technology. Like it's the second topic on the panel, talking about the technology and technology implementations and how financial institutions will address any inefficiency in implementing new technologies. So with that, like, I don't know, Rob, would you like to comment first?
Yeah, the resident vendor gets to have a chat about that. I think, you know, IT and or the vendor risk management whole picture has gained some time in the spotlight recently, including that in front of the regulator. Sourcing and procurement and vendor onboarding are all challenges which haven't been done particularly well historically, I think it's fair to say, nor have they been delivered within good enough timelines. I think that's something that the vendor community recognises, and I think are striving very hard to try and ameliorate or at least make more efficient. However, accommodating client data, banks' data, has a lot of benefits. Identifying and remediating errors and anomalies in those data issues is a key benefit to working with a good vendor, and I think there won't be a kind of an experience that everyone in the room will have had in some capacity. I think we're seeing that flexible technology is becoming more attractive in a big way. So flexible, I mean that it can fit into the existing technology stack. And I think that's a real trend that's critical. And as well as that, I think if there's a capability for the technology to see off or cover more than one risk, that's also a very attractive trend and clearly leads to fewer solutions that can cover multiple risks, mitigating that third-party risk. We saw a big fine for TSB that had third-party or even fourth-party risk, and I think there was something like 85 other fourth parties involved, which gives some consideration to that. I think furthermore, implementing technology which can accommodate some in-house built elements and functionality on top of that which is bought is another trend that we're seeing becoming more attractive. And lastly, IT failures are becoming less tolerable just generally.
Thanks, Rob. Like when you talked about IT fits and integration with in-house systems, I think we will come to that topic a bit, and we have more discussion on that. But Ian, would you like to take this?
I can certainly tell you how not to do it, having seen a few projects go wrong in my life cycle in terms of surveillance. But I think if I was to call out a few salient points around how to try and get it right, and no matter what vendor you're working with, I think it's hugely important, and it's pretty obvious, to make sure you have the right level of skill sets employed within the surveillance function to start with, to understand the products, the risks, the behaviors, and the scenarios. But equally important is to ensure that you have a fully traceable underlying risk assessment that's been completed, regardless of the surveillance, transaction monitoring, trade, e-coms, whatever it might be. You need to be able to evidence that and do it properly and do it with the business and do it with your compliance colleagues as much as you can, such that you fully understand and are able to properly articulate the risks. I think that's point number one. Leading into that, and point number two would be around making sure you've got your business requirements properly articulated. I've seen, again, where things can go wrong, where requirements have not been properly documented. They've been done in a very poor fashion and been done by people who don't fully understand the outcomes of the risk assessment. And for that, I really would recommend a hybrid type of employee, sort of a surveillance/IT expert. We could probably call them data translators, who are able to understand the outcomes of the risk assessment and translate those into requirement documentation for the IT or data scientists to implement. The third one, probably the most obvious of all, really, is around your data management framework. This is where things go wrong almost all of the time, and certainly the thing that keeps me awake at night most of the time as a head of surveillance for a number of years is the confidence that we have, or lack of confidence, in the data that we consume. And it's generally, in theory, quite straightforward to get right. There are a few points that you should focus in on and try and aim to get those right. I think, importantly, at the very top of the house, you need to have the right level of governance in place, such that you are, if you can, try and get your data controls in at the enterprise-wide level, so that makes things easier for you as a practitioner to get the data that you need. I think it's important to make sure you work very closely with your model risk management colleagues to ensure that your MRM protocols are working effectively, and then making sure you have the right level of senior accountability in terms of your application ownership. Just getting your governance right is hugely important. I spoke briefly about requirements and making sure you fully understand that you've been able to articulate your source system requirements, your source system inventories, your critical data elements that need to be monitored and need to be applied in your development and build. And importantly, once you start to go live, ongoing monitoring. This is hugely important in making sure that you've engaged with your chief data office, your CDO folk, who are going to monitor your critical data elements from a field level, making sure you've engaged with your IT colleagues who are going to monitor your data at the file level from a production support perspective, and ultimately ensuring that you yourself are able to do deep dives into that as well, to ensure that it's working effectively. And then finally, making sure all of your data security is in place, that you've got the right sign-offs and got your GC and data transfer agreements in place, because that's where you can come unstuck quite quickly. And then lastly, in terms of the point I wanted to raise, is just around tuning and calibration. I mean, in terms of effectiveness, again, it sounds more straightforward than it is, but there is a lot of focus by regulators now on tuning and calibrating your alerts to align with the data management framework. And so ensuring you have the right level of KPIs and metrics in place to show you where your scenarios are performing well and where they are not. Having a plan as well, making sure you can have a combination hybrid between an agile approach to adapt to where your KPIs are telling you should go, and importantly also a programmatic approach to ensure that you can actually also have in place a program of work that shows and evidences to the regulator that you're doing this properly. And then ensuring that you have the right skill sets in place, you can actually do the tuning from an above the line, below the line perspective, as well as making sure the SMEs are also involved in that. And also making sure you have the analyst feedback incorporated into your tuning and calibration, because without that, you're not going to go anywhere fast. And I think those four things for me are hugely important. If you get those right, you're in a good space.
Thanks, Ian. Like, just to, then it's end-to-end process. Keep that in mind. It's not only like we get the technology and we plug it in. Peter, would you like to?
I mean, just to re-emphasize about data, I think that, and I like Ian's idea there about having a surveillance specialist and sort of hybrid IT specialist, because one of the things I refer to a lot is lost in translation. IT teams are very good at doing what you tell them to do, but you have to be hand in hand with them along that process. And it's very easy to miss some of the key elements. Like you can look at data and data tagging and data mapping, but then it's easy to not have things tagged correctly. So for instance, it's absolutely critical to identify internal trades versus hedging transactions versus client transactions, but that's not always well understood by IT teams, and what you end up with sometimes is a mess of data and the tagging's not done correctly, and that's critical. I think the other thing to bear in mind in terms of data is that ideally you want to move to a world where you use data lakes rather than using lots of disparate sources of data. The challenge with data lakes is that they were often built around reg reporting. They weren't built around trade surveillance, so they're often missing key elements, even things like trader names, because spot transactions, for instance, in FX don't need to be reg reported. So often that data is missing, and it's not until further down the road or you're well into implementation that you can find that some of those key data elements are missing. So to me, it's all about data. I think that's the absolute critical piece for me.
Thanks, Peter. Tarek?
Yeah, I think that surveillance frameworks really need to face many challenges on the technology, and one of them is these two requirements which are opposite. On the alert generation engines, you really need to have some heterogeneous alert generation engines, as much rich as possible, as much agile as possible, that you can tweak very easily in an agile manner to adapt to market condition, again, to be able to hunt this moving target. And on the other hand, you need to have a unified workflow that would involve the various stakeholders in alert management, involving them in a structured and efficient way to really manage in an effective way all the processes. Of course, the challenges are numerous. One of the most important is clearly the data quality monitoring, where it involves many stakeholders, not only IT, but sometimes also business. The CDOs are also coming into on the scene since some time now. So yeah, I agree with all what have been said, and it is a permanent work that needs to be done to address all those challenges.
Thanks, Tarek. Considering it's a technology theme, yeah, and definitely interesting for the many of the people in the room. Just wanted to follow up on a couple of points there. Like one of them is actually like when Ian started talking about the data, we focused a lot about the data. What I've noticed in previous, I want an interesting story there, in previous role, like lost in translation, talking about the data impacts. Like in one of the previous roles, working with technology, so we've noticed something from the surveillance side. The surveillance models are not detecting something. Yeah? So we went in, we started all the investigation. Well, it's a data issue, but technically the data was there. Like it's not like we're missing any data. Actually, we had more data. So that was part of some of the internal trades data. Like again, this is not in my current role. This is several years ago. And then when we start talking to technology, said like there's this additional data. Why you're sending this data? I say, yeah, what's the problem? There's no impact. Like, with just more data. The issue is, the impact is that when the alert logic started to work, or the scenarios, it creates what is normal, trying to build benchmarks. And this additional data actually skewed the entire history. Therefore, like actually having that additional data, if from a tech perspective, like, well, it's not a problem. I'm not missing anything. I'm sending you more stuff. Actually, it was very significant in that specific case. So definitely having that hybrid business tech understanding and understanding the impact of data versus business. And with that, there is this concept I really like. It's source to value. As a technology, if you keep thinking about like, okay, it's not only like I fixed the data in the implementation, so how will continually monitoring the impact. If something changed, business change. We all our businesses change. And different organizations do have different requirements. Depends on the bank, the risk assessment, the different trading business. So just a quick reminder, if you want to submit questions, you can still do that via the app, and please and we will open it towards the end for some questions. We can take it the old classic style as well with the hands. Yeah. Moving on, totally different topic. Like we'll move into our theme 3, or like our third question. Apparently the papers are stuck. Just 1 second. So we will be talking about to what extent do firms have a full grasp of compliant hybrid working? And with that, I will definitely hit to you, Peter.
Yeah, I mean, this is interesting from my previous life as first line controls and then moving across to second line controls. So, and having worked in the front office as well. So I think banks are far less keen on hybrid working, especially for front office now. So it's become less of a challenge than it was during COVID. However, the other side of that coin is that some institutions are finding it's a differentiator. So certainly front office employees, if it's a similar package in a similar institution, but they're offered some hybrid working, that's often a differentiator. So it's still a challenge in terms of where banks go on that front. I think ultimately it's harder to manage things as well when traders are working from home and salespeople are working from home. You raise all sorts of additional challenges around things like conflicts of interest. So, for instance, there's a lot of mixed households. Often people don't have dedicated studies and dedicated spaces to work. People can often work in different institutions, different financial institutions. So there's certainly risks around conflicts of interest. There's also more significant risks in terms of collusion when people work from home. You know, not that collusion can't happen with people working in a dealing room, but dealing rooms tend to have very strict rules around mobile phones, either to turn them off or they're strictly not allowed to be used for private mobile phones. But to manage that and police that at home is almost impossible. So collusion, I think, is a much bigger risk. And then you look at when people are working from home. You know, there were lots of discussions initially during COVID about additional monitoring. You know, there was talk about when I was at Stanley about permanent screens on people's desks, on having cameras on permanently. But you run into all sorts of GDPR and privacy issues, and the rules in the UK are different to other jurisdictions, so it becomes a real mess overall. So I think, you know, the answer is it's very hard to manage things as effectively. But what we have to remember is that there's not any change in regulatory expectations. The regulators still expect us to monitor for the risks and monitor effectively. And I think one of the other things that I think is worth mentioning from a hybrid working perspective is in terms of operational resilience. You know, in terms of people's home systems, how reliable their internet is, but also things like Citrix and remote working in terms of challenges there. So, I mean, it's a big topic in its own right. And, you know, I've sat on panels where we've talked about this only as the single topic, but I mean, I think it's a fascinating topic. You know, as I said, I think it is a differentiator for banks, but I think you have to accept that it does increase risks, and there's some risks that you can't manage effectively.
Thanks, Peter. Ian would like.
Yeah, no, I'd agree with all of that. I think it is a differentiator, and it continues to evolve. I think Sam Altman, the CEO of OpenAI, said last week that he expects remote working to disappear over time and that AI will replace the remote workers, and he expects everyone to get back into the office to talk to each other like human beings again, which is perhaps a bit ironic, but he was on the Senate panel yesterday asking for more regulation for AI, which is good to see. But be that as it may, it does exist with us now, and it varies across the globe, in particular in the lower cost locations where it's almost seen as a given. So clearly we have to take can I use the word holistic? I know it's often banned in these conversations, and I don't like it myself, but for lack of a better one, an holistic approach to controls around trying to manage the working from home risk, such as it is. And I think there are many components to this, not just in surveillance, but including also making sure you have the right policies and training in place across the firm to ensure your staff understand the rules and requirements around that. Importantly, it also pivots into the insider threat element to how you manage risks and controls. I think we work very closely ourselves from a surveillance perspective with our CISO and cyber colleagues around managing insider threat, in particular with the working from home paradigm, and looking at things like remote access to systems, privileged access to systems, DLP monitoring, folks sending stuff out of the bank that they shouldn't be doing, or using USB files for that, as well as focusing specifically on leavers, where there's an additional risk of folk who are leaving the bank and might want to do something silly and take things with them. So all of that together, I think, needs to be looked at closely. And of course, the surveillances that we do ourselves can also be tailored to that in terms of lexicons, in terms of looking for behavioral change and changes in P&L and things of that nature. So, so certainly a lot to do there. But I think importantly, the banks must take a coordinated view on this. I think it's important that, especially when you have a thing like a pandemic or a stress event, we need to make sure that the different functions, the control functions, are properly coordinated, because they'll all run off and try and do very well-intentioned things like NFR and front office controls, to Peter's point. So it's important to be able to coordinate all of those activities so there's no duplication and overlap. It's important to make sure that you are able to understand the outcomes of those and report them effectively. And very, very importantly, and Peter touched on this too, is making sure you have all your legal sign-offs in place from a GDPR and that type of perspective, because you can trip yourself up quite quickly in that space as well.
Thanks, Ian. Definitely. Rob, or do you want to?
I haven't got much to add. I think obviously most of the tactical and quick decisions which were required to be made to resolve some of the challenges have now been galvanised and turned into strategic ones, or at least that's what we're being told. I think there's some concerns, and I've read some murmurs around making sure that the regulator suggesting that policies are relevant for the model, and they're not just a kind of a list of older policies which were completely tuned to people being in the office 100% of the time. Making that fit for purpose and settle as we settle into a more regular drumbeat of working practices, record keeping in particular from a working from home environment. I guess just sort of bringing this back sort of specifically to communications oversight. Obviously those communications channels need some focus as they still remain in flux. There's still some, I guess anything less than complete coverage is taking some risk.
Thanks, Rob. Doug?
Yeah, clearly the hybrid working introduces some increased risks and some particular challenges. I think that, well, technology helps, but we cannot rely only on technology. I think that the communication and raising awareness of the people that are working from home on the potential additional risks that they are incurring when they're working from home is really key. And sometimes we need to decide some limitations on the way they are using the tools from home, because there are gaps that we're not able to cover today with the technology that we have. So it's really about raising their awareness, making them really aware about the risks that they are incurring when working from home, and accepting that, okay, maybe there are some it is better for them in some cases to work from home, but it would imply some limitations in the way they are using the technology and the tools, and even for their own safety. If there is an audit some years later, they will forget that they have been using something which is outside the the scope of what is record kept and monitored.
Thanks, Tarek. Yeah, with that, we'll move to the last section or theme for today panel, which is a very classic one to conclude with. It's holistic surveillance. I've been on panels many times talking about holistic. The word changed over the years to contextual, etc. So definitely a topic still there. And definitely I would like to kind of start there talking about the priority of this topic changed over the years. And actually some of the panelists with us today, I had many discussions with them. Here more focus on trade and communication surveillance, to which degree the trade and communication surveillance, bringing these two together, does that actually adds value? And how much value is it worth the investment? All these different types of questions, of course, different banks, different institutes, different from a risk assessment perspective or from the risk perspective may have a different approach to this. Yeah, I'm very interested definitely to hear from our panelists. So Peter, with that.
So I think people have talked about holistic surveillance for a long while. It's idealistic. I think it's, as you say, it's how we define it and where you want to be. I think you've got to say, why do you want holistic surveillance? And I think it's ultimately because you want your surveillance to be more effective, but I think you also want it to be more efficient. So one of the challenges with trade surveillance is tying your comms into that trade surveillance. So in an ideal world, you would do everything in real time. That's not practical. But what you want to be able to do is pull your comms with your trade surveillance in a much more efficient way. Investigations are costly and they're time consuming. And I think if you can get more efficient and do that better, that's where holistic surveillance, I think, will start to improve. I think the challenges, though, again, and we talked about it before in terms of data, one of the real challenges about holistic surveillance is, again, disparate data sets. And you're looking at pulling together structured and unstructured data and pulling it together to try and then combine things to look at things from a holistic perspective. And we're not there yet. And I think that where we end up in terms of what holistic surveillance looks like will take longer and will be different. I think it's kind of a utopian view of how we end up from a overall comms and trade surveillance perspective. But we're not there yet, and I don't think we're going to be there for quite a while, to be honest with you.
Thank you, Peter. And just to touch on two key words you mentioned, effectiveness and efficiency. Bringing them together, does it add more to the effectiveness of the detection from a scenarios perspective versus do we actually target the efficiency of the analysts when they are doing the reviews? Because those are two different kind of business values that we can target. Ian.
Yeah, I mean, we've seen a lot of false dawns over the last 5 to 10 years around the use of this word and the offerings we're seeing. So, it's hard not to be cynical about trying to get this right in that space. However, with that said, I think with my glass half full, we potentially sit on the precipice of a new paradigm with the advent of ChatGPT, for example, and the large language models that are coming out. And if you are not of the ilk to run away into the woods and build a log cabin and take lots of canned food with you and hide, and you want to stay and actually do the implementation of these things, then I think there is a lot of opportunity there. I do see this coming in and potentially changing the way we do surveillance. Now, I know we've said that before a few times, but this does feel to me, if I believe all the hype, and I've seen it in use, it is quite scary and what it can actually do. I think we could be at an inflection point now where this is going to come and change surveillance in a very, very big way. I certainly think from a trade surveillance perspective, you could leverage AI and the large language models and the machine learning that goes with that to obviously look into the complex data lakes that Peter was talking about and to pull out anomalous types of trading activities. That's a given. I would imagine that it would also want to use natural language processing to scour and scan, subject to the sign-offs from DPO, of course, the communications within social media, market news events, and tie those back to trading events. I would imagine that you would expect to see machine learning diving deeply into the trading activities and looking back at how they have been done and what any changes there might be in terms of behavior, and also to try and weed out any of the more manual and processes and try to make them more automated such that you are able to tease out the bad actors. And then likewise on e-coms, there's lots of overlap there too, but of course the transcription and of audio and into text will be far more effective now, I think, based on the technologies we're starting to see. Translation, of course, tools are within ChatGPT and other large language models are quite easy now, actually, and that can be another definite advantage. I think, again, NLP, I spoke about it at trade surveillance, likewise, in terms of communication surveillance, being able to link in the communications to the trading activities, I think is a given, and we'll certainly see that. There's certainly a lot more we will see in the e-com space as relates to AI machine learning with my glass half full. And I do think as I said, we are sitting on the edge of this paradigm. Of course, with all that said, it's important to note that you can never take away human judgment. That's massively important. And I think that will always, of course, is always going to remain. And also importantly, the rights of employees and clients in terms of privacy and data privacy and making sure that that is also properly protected. And as I mentioned earlier, I know Sam Altman and others were at the US Senate yesterday asking for more regulations. So watch this space.
Thanks, Ian. Definitely. Like, again, I like the glass half full, like a side of it. Rob, still with this glass half full? Or
Yeah,
like...
I'm trying to be full. No, just to recap, I think there remains some ambition. I think alerting on the basis of all the relevant information around market abuse, or using both trade and comms at the same time, remains inaccurate and inconsistent from the solutions I have seen, despite their claims, and consequently this is generally managed through the investigation process. I think most of the informed thinking in this space to this point has been that they recognise the difficulties in these two disciplines, doing them in isolation well. Joining them together adds complexity, and there is still a little bit of a question around the huge advantages or multiple new positives which might be delivered as a consequence of being able to identify on the basis of the both. Look, I'd like to agree with Ian in the sense that the technology must dictate where we go, and if we can, we should. Outside of that, I think banks would need to redefine some of their target operating model when they've got colleagues in disparate locations reviewing comms in comparison with trade, for instance, often near shore or offshoring those first review teams and bringing them all under one roof might be another consideration before we get there. But look, I am full on for the tech to dictate where we can go, and if it's there and it works effectively, particularly on identifying the risk, rather than just through the investigation process, then all the better.
Thanks, Rob. And actually, very good point you brought it about the challenge with the organizational structure. Because like with the moment you bring, even it's the best solution, the value should be significant enough for organization to do that change. If you have two different divisions, sections, like departments doing this separately, that will require major change sometimes in the organization. Tarek, would you like to?
Yes, and I would add that even if, when you have one team or one team head managing the various channels, today, unfortunately, what we can see on the field in most instances is that surveillance on different channels would lead to different cases. But you're still able to join the dots during the investigation phase, where one case popping up from the trade surveillance can be further digged into the e-communication to see if there are any elements that would corroborate any suspicion that we have. I think that I agree with Ian that maybe here AI, machine learning, NLP would really probably help financial institutions to move to the next step and have all these technology helping to join the bits, maybe changing the paradigm, because right now most of financial institutions are using rule-based surveillance, so the rules are defined upfront. Now, if we want to move to a more deep dive analysis approach, where we just following a kind of strategy. This would really help to join the bits between the different channels. And this is where I think that new technologies based on AI and NLP could help.
Thanks, Tarek. I know we are running out of time, but just I will take maybe one or two questions we already have here, like submitted. I'll go for the first one. What are the biggest misconceptions firms have with their communication monitoring requirements? Opening it up, Rob.
Yeah, I'm not sure about misconceptions. I think the definition of scope of who is in scope of monitoring remains a key challenge, and not just defining it at the outset, but also maintaining that through a joiners, movers and levers process. And we see firms really struggling to apply consistency. So you've got 5 people on one desk and 5 on another, but someone has dropped off the scope of monitoring for some reason because they've changed roles slightly, but there's no real difference in their overall compliance requirement. So I think that scope definition and maintaining the respective books and records against whatever it might be, their HR system, which defines whether or not they should be within the scope, is one of the issues which we've seen.
Thanks.
Yeah, I agree. I think that really the record keeping piece of it is really one of the biggest challenge, because record keeping is not just about setting it up when you are implementing the system, but it's about monitoring it on a permanent basis. And this means that you need probably to put in place a real governance which is focused on it, where you have stakeholders, roles and responsibilities, who is responsible to define the scope, to maintain it, who validates. When there is a new channel, are those people, the stakeholders, involved in the decision making to make sure that this new channel that is going to be used by the business will be ready to be record kept, so that the e-communication surveillance is up and running.
Yeah, just very briefly on that, I think it's a hugely important point. I think with the advent of the collaboration tools, the proliferation of collaboration tools, clients having their own collaboration tools. Of course, we have Zoom and implementing Microsoft Teams and things of that nature, but they bring with them their own compliance risks. And so we need to be very mindful of those as we implement them.
Thanks, Ian. Thank you very much, everyone. I've been given the signal, so I know we a very interesting panel. I'm definitely happy to take some questions separately, and thank you all.